Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be comparing Bitcoin with the altcoins as well as the Bitcoin miners. And the question is, who wins in terms of performance? I'll also be having a look at the progress of the ETFs and what's going on in the background of the Bitcoin price. I'll also have a look at the wider markets as well as the 60-day cycle and the Brexit countdown on one of the indicators for the end of this bull market. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always do your wider research before you make any investment decisions or any swing trade decisions. So I'm going to go straight into this big comparison between Bitcoin, the altcoins, and the Bitcoin miners, and have a look at exactly who wins in terms of the performance. And since the halving is just around the corner, I'm going to be having a look at the performance of these three from the halving of 2020 to the eventual top around November 2021. As everybody knows here, I have no investments in Bitcoins or the altcoins. All my investments are focused entirely on the Bitcoin miners. And some people have asked many times, why do I do the Bitcoin analysis when I'm only in the Bitcoin miners? And the simple answer is the Bitcoin miners depend entirely on the Bitcoin price. Because the Bitcoin price, as that goes up, the value of the Bitcoin miners goes up. But not just one-to-one, it goes up by a leverage play. And that is the reason why I'm heavily invested in the Bitcoin miners, which is based on the previous cycle that we went through. So let's have a clinical look at it by picking a few of the altcoins and a few of the Bitcoin miners and comparing their prices with what happened with Bitcoin from the halving in May 2020. Okay, so I'm going to start off with the Bitcoin performance since the last halving in May 2020, which was exactly at this point here. And the price for Bitcoin on the day of the halving, which was Tuesday, 12th of May, the low of that was 8,529. So if we measure from 8,500 to the top at 69,000 here, we can see that was a 714% increase, i.e. a 7x. So we'll write that down. Bitcoin was 7x. And if we compare that with a few of the most popular altcoins out there, and I've just picked a few that were regarded as successful in the last cycle, the first one being Cardano. So Cardano, from the day of the halving here to its top, so Cardano also went up by 7x. And the second altcoin I've got is XRP. And if we measure XRP, similarly, that went up by 966%, i.e. a 9x. The third one I've chosen is Chainlink. This was one of the most popular altcoins in the last cycle. And Chainlink in the last cycle went up by 1,517%, i.e. a 15x. And the final altcoin I've chosen is MKR, which stands for Maker. And Maker increased in the last cycle from the halving by 19.6x, call it 20x. And what I've done is to average out all of these four, and obviously there will have been some altcoins which may well have performed much better than this. But I think this is a good basket of the ones that a lot of people were talking about in the last cycle. And the average of these four came to 12.7. And considering that there are over 9,000 that are listed on CoinMarketCap, it's virtually impossible to pick any 4 or 5 that are going to outperform the rest of the altcoins. And if we compare those altcoins with some of the Bitcoin miners, so if we take Marathon as the one to compare from the halving here, it went up to $84 in the last cycle top. That was a 120x. And without going through all of the other Bitcoin miners, I've shown you this before many times regarding the Bitcoin miners. And if we just take the average of the best performing, which was Marathon, and the least performing on this list, which is Hut8, CleanSpark, and Hive Digital, just the average of those four comes to an average of 44x. So there you have it. You've got a comparison here of exactly what happened with Bitcoin with a 7x from the halving. We have the altcoins with a 12.7x on average, and the miners with an average of 44x. And even if we took Marathon out of the equation and just looked at the Hut8, CleanSpark, Bitfarms and Hive Digital, the 4 least performing on this list here, the average of that came to 19.5x. So even the 4 least performing miners still came to 19 X. So there you have it in a nutshell, and it's your choice. And all I would say is that while Bitcoin is a very volatile asset, the altcoins are much more volatile, but the miners are even more volatile than the altcoins. So that is the trade-off that you have to really make, and it's everybody's choice. And I have no doubt that many of the altcoins will outperform many of the miners. Of course they will, but there are, as we saw, over 9,000 listed on the coin market cap, and with the miners you have only 20 to choose from, and that's it. So for me anyway, and I can only talk about myself, it's much easier to choose from 20 and come up with the 4 or 5 best performers than to try and choose from just over 9,000. So for those people who ask me many times in the comments over the last many weeks and months as to why I concentrate on the Bitcoin miners, the greatest value that I see between Bitcoin, the altcoins, and the Bitcoin miners is firmly with the Bitcoin miners. And this is the reason why I run the private members section, which focuses entirely on the Bitcoin miners. And the whole purpose and objective with the private members is to capture this move from the halving, this move that we got with Marathon here, but also extend it to all the other Bitcoin miners, to capture this move here from where we are now to where we expect this price of the other miners to go. So that can be anywhere in this region here. This is what we're trying to do. That's the objective. That's the purpose. And of course, past performance is no guarantee of the future. And while we know that the charts don't repeat themselves, they do rhyme with each other with each cycle. So we should expect something not entirely the same, but at least something resembling it. And only time will tell. Okay, so I'm going to now move on to the ETFs of what's happening in the background that's determining and affecting and influencing the Bitcoin price action. The first one I want to have a look at is this one here, that Morgan Stanley set to approve Bitcoin ETFs in the next 2 weeks. And that was published 4 days ago. So you can see more and more companies are coming on board with the ETF narrative. But that's not entirely in the USA, because all around the world, this kind of thing is happening in the background as we approach the halving. As you can see from here, a very big deal. Crypto suddenly braced for a huge China ETF earthquake after Bitcoin, Ethereum, and XRP price boom. And if people think that the ETFs in the USA have been an incredible success, wait till you see what happens in China. And certainly we can expect with the Hong Kong spot Bitcoin ETF in China, that could mean another huge Bitcoin price earthquake, and that's just around the corner. And many people have said that the ETF inflows have actually fallen down over the last few weeks. And yes, there was a period when Genesis was selling all their Bitcoins in the Grayscale Trust. But as you can see from here, just only 16 hours ago, there are reports that everything is now turning around with 859 million inflows after previous outflows. And we can see this visually on the 29th of March regarding 24-hour volume. This was the period when we saw the falling outflows here. And this is now what's been registering. We're now starting to get back to these big inflows, which were the reason the Bitcoin price was doing so well. So we can expect a period of rising prices if this is to go by, and the start of more inflows to come. And this is backed up by the assets inflows and outflows chart that I've been showing you regularly over the last many weeks. While the outflows from the Grayscale Bitcoin Trust was about 20,600, this was more than made up by 9,000 from BlackRock, 8,000 from Fidelity, 6,000 from ARK, etc. So you can see that they're all in the green figures here. And that has meant that what's been going out has been more than made up by what's been coming into the ETFs over the last 7 days. So what that really should mean for the Bitcoin price over the coming days and weeks, for the expectation of the price for Bitcoin to be moving steadily higher over the coming days and weeks. And if we have a look at the wider markets, starting off with the SPX here, we can see that we're coming up to the 60-day cycle where we expect the price to fall into that 60-day cycle low for the start of the new cycle. And currently what we're seeing is a bearish divergence from all the way up here. So we can see that the bearish divergence line takes us all the way to this price here. So while the SPX has been shooting up, the RSI, as you can see, has been making lower highs. So sooner or later we're going to see some sort of a pullback into the 60-day cycle, wherever that's going to be. Currently, the 60-day cycle should end around about the 3rd of April in a couple of days' time. But we know this is a flexible reference point, so we can expect some sort of a correction with the SPX coming up, which seems to be a divergence from what we're expecting with Bitcoin. And moving on to the Russell 2000, as we've been mentioning over the last many weeks now that we've been covering the Russell 2000, that we came to this neckline, and the expectation was that after the fake out, we came back and retested it, and having broken up above, there was the expectation that we would come back and retest this key level of resistance here and to retest that as support, which is exactly what we've done over the last couple of weeks there. And currently you can see quite clearly that we are making higher highs one more time from here. And a few of the Bitcoin miners are actually listed in the Russell 2000. And since we expect the Bitcoin miners to do really well between now and the end of the bull market, I would expect the Russell 2000 to be affected by that in the coming weeks and months. And moving on to the dollar, we can see quite clearly it's coming into a lot of resistance here with the previous strong resistant point. And the expectation is clearly for the downside here. And moving on to the gold price, we can see, as expected, we've now closed the monthly candle as the highest candle close in the history of the gold chart. So what we've been doing is watching this very strong resistance line here. Many times it's come up to resistance here. And finally, as we've been mentioning, that there's a very high probability that it's going to break through this resistance point. And this is exactly what it's done. And the new candle has already made a higher high from the last month's close. So what this signals is that we're on our way to a massive bull run over the coming weeks and months. And moving on to Bitcoin itself, as we've just had a monthly close here, this has been the highest monthly close in the history of Bitcoin. We've closed at 71,288, which has taken out the previous all-time high at the 69,000 level. And for those of you who've got more time on their hands and want to count the number of green candles in the monthly chart that we've got here, for the first time in the history of Bitcoin, we've had 7 green monthly candles, the highest previously being 6 over here and 6 down here. Is there a clue of what may well be happening here? We don't know. All we can look at is exactly what's on the charts. And it's obviously coincided with the fact that we've actually broken the previous all-time high at 69,000 before the halving for the first time in Bitcoin's history. So that may well be giving us a clue that we have a big blow off top coming up over the next 6 to 12 months. And maybe the weekly chart is giving us a clue. So we can see quite clearly the close yesterday on the weekly candle here was the highest we've ever had as well in Bitcoin's history, the last one being at this point here back in November 2021. And as mentioned in last week's video, this hammer candle is giving us a clue. On the whole, the probability is over 60% for the price to move to much higher levels. And when we look at the 60-day cycle, that gives us a further clue and confirmation that with a higher probability, the direction in which we're going to be going. So here we have it, the 60-day cycle. For all intents and purposes, it looks very highly probable now that we've made a cycle low here at day 57 from the previous low here on day 43. And as you know, if you've been following the cycles, once we make the low at this point, we have a rising market into the midpoint, the white line here. And after a brief pause, we should make a higher high after the midpoint to give us this right translated cycle. So this is what I would be expecting now when you look at the Bitcoin 60-day cycle here. Having made this 60-day low on day 57, the higher expectation is for the price to move towards the midpoint before having a little bit of a pause and then running towards the 60-day cycle high, wherever that's going to be, making the higher highs before a pause into that 60-day cycle low, which we had like here and over here and over here. How high that can go, we really don't know. I want to show you something incredibly interesting. Whenever you see this particular candlestick pattern, you will be able to identify which direction the higher probability is for the Bitcoin price or any asset that you look at with this particular kind of candle. If you've been watching my recent videos, you'll know that I showed you this green candle and why this was a very important candle after this fall that we had. This red candle, which we call a Marubozu candle, was really there to shake people out because people's expectation would have been to the downside. But instead of going further down, we had this green candle being printed after it. And this was the bullish engulfing candle, whereby the top and the bottom of it engulfs the top and bottom of the previous candle, this red candle here. Now this is on the daily chart. So while this candle is very bullish, if you look at the 2-day chart, those two candles, the red and the green candle, and the aggregate of those two candles gives us this candle with the long wick at the bottom. And this is at the bottom of a trend, as you can see here. And what that really tells us is that if you look left, this candle was very similar with a long wick at the bottom, and we got a nice big run up to the top here. And this was giving us a clue that we're just going to have another run up here. How far that can go could be much higher than this, but these are the clues to always look out for in these candlestick patterns. And what that's really saying is that people are not prepared to go below this price. That as soon as the price comes to these levels, there's a huge amount of buying up going on, and this being a higher low from this one here means there is a rising demand to the upside. So we can expect with a higher probability for this to continue to the upside. And now it's time for this. It's now time to have a look at one of the Bexit indicators, i.e. the Bitcoin exit indicators that we're going to be using to try and time the top of the bull market as near as possible as we can get. And the one I want to show you today, is the RSI on the monthly time frame. But also you can see the stochastic RSI at the bottom here as well. So what I've done is I've looked at the previous tops. As you can see, the corresponding tops are all here within the RSI and the price actions. And if I move this a little bit higher, which was this one here in 2017, and this one in April 2021, which was a lower high from the previous 2017 peak on the RSI. And if we move the chart to the left, so let me draw a trend line between these 2 points to give us some sort of an idea of where this RSI line is most likely to meet that trend line. If you take it from the 2 tops here and this one at this point, we can see that the RSI has some room to grow to the upside here. And that may well coincide with the top that we're looking for over here. So just based on that indicator, and we'll have a look at other indicators over the coming weeks and months, but clearly on this indicator we've got room to grow to the upside here. And with the stochastic RSI well above the 80 blue line here, this one, we can see when it comes to the peaks like this, the stochastic RSI can remain up there for quite a long time, over here as well and over here. So it looks to me as though we're going to be going in a period of extended overbought territory here. Only time will tell, but that's one of the indicators we'll have a look at when it comes to the top of the bull market, when this RSI line comes to meet the green line or approximately around there. Finally, I'm going to show you our portfolio, and I know many of you are following the portfolio that I show you with the private members section where we cover the Bitcoin miners. So this portfolio has been running since the 6th of January in 2023, so right at the beginning of the bull market. With a starting capital of around $100,000, we put a target of $1 million to get at the end of 2023. And that proved a little bit ambitious, but we came in at 434,989 at the end of the 2023, which was approximately a 300% increase. And we've taken that figure, 434,000, and used it to compare a passive portfolio with that amount of money and a trading portfolio with the same amount of money. And a passive portfolio is one where, just like in 2023, we left it all alone with no trades and see what the performance was going to be at the end of the year. And we're going to do exactly the same with this passive portfolio. At the end of 2024, we'll see where we are. And currently, we are 1% up, which may not sound very good at the moment. Obviously, we're in the middle of the bull market. But when you consider that the Bitcoin miners have just had around a 40% correction, we haven't done too badly by having a 1% increase instead of any fall. So how does that compare with the trading portfolio, which is the same amount of money? So unlike the passive portfolio, the trading portfolio involves doing ratio trades, or what other people may call trading pairs between two different assets. And what we do is we look at the differentials in terms of the ratios between the pairs, and when it's in our favor, we actually swap one to the other without taking any risk. So basically we sell one at the same time we then buy the other one straight away. And that so far has given us a 31% increase to 569,119. This is the running total that we have at the close of play on the 28th of March. And our target is $5 million by the end of this bull market. And as you saw at the beginning of this video, we haven't even got to the halving yet and we can expect some real fireworks after the halving. So currently, if history is to repeat itself in some form, then the Bitcoin miners may well be presenting one of the greatest opportunities of a lifetime towards the end of this bull market. And as I mentioned earlier in the beginning of the program, the volatility is much greater with the Bitcoin miners than Bitcoin itself. But if you can deal with that volatility and have the patience to get towards the end of the bull market, you may well be interested in joining us in the private member section with the Bitcoin miners by clicking the join button here below each of my videos, or you can click this button here in the description box. And for the price of a coffee per week, you get access to 2 videos every week on a Wednesday and a Friday. And as you can see, we do updates every single day when the market closes, and also give you all the information regarding the Bitcoin miners as time goes on to keep the members up to date with what's going on with the Bitcoin miners. And what you're really doing is joining us on this journey from where we are currently to the end of the bull market over a period of between 6 to 12 months. And just like over here, to try and capture the biggest moves in the bull market run, this is exactly what we're expecting to do over here, to capture the biggest moves which we started at the bottom of the bear market, and to get to as near the top as we possibly can here. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.